Ford Williams, Vice President and Relationship Manager of Warehouse Lending at First Horizon Bank, joins the Construction Lending Podcast to discuss the opportunities in construction lending and the role of warehouse banks.
Are you seeing any trends with just general inquiries? Hey, sublimits for construction line. Can we put 203K loans on our warehouse line?
It's beginning to get a lot more play, and it's a product that folks are beginning to see that there's a benefit to offering.
What are some of the things that you consider or First Horizons considers when issuing a sublimit for construction?
The name of the game, right, is to measure that risk, right, and to monitor it. So when we think about a construction program, obviously what we care about is the people who are actually running the program.
For a independent mortgage banker out there, what should they be looking for in a warehouse bank?
If I were a mortgage lender, I'd be looking for a warehouse partner who can give me the kind of capacity that I think I might need, who can fund my loans fast, who can work with me in terms of the intricacies of my program.
I'd like to welcome everybody to the Construction Lending Podcast. I'm your host, Sean Ferris, and we have a special guest today, Ford Williams. And Ford is the Vice President Relationship Manager of Warehouse Lending at First Horizons. Welcome to the podcast, Ford.
Thanks. Appreciate you having me.
Well, we've been trying to get this one scheduled for quite some time, and it's exciting to finally get you face to face here. Well, why don't you give us a little background on, what you're seeing in warehouse banking?
At this point, we've been sort of in this, a struggle of a market cycle for the last couple of years, and so folks are beginning to figure out how to navigate through. We talked about how the latest survey from the NBA showed that 59% of all IMBs are showed for Q1 a profit. However, it's sort of odd because the actual average across all of them actually showed a net loss of about 25 cents. So you can see sort of the struggle. You've got folks that are beginning to kind of turn the corner and other folks that are still trying to figure it out. So there's probably a few dead men walking out there still, but it's getting less and less. So, I'm sure certainly by now any of your listeners have heard that Freddie Mac is offering now beginning to offer a pilot program on second liens. And so it'll be interesting to see kind of where that goes. There's some specialty lenders in the marketplace that do offer that product already, but most of it's backed by money managers and hedge funds and such. And so this program, if it's successful, obviously Fannie will probably follow. So it could be a boon for some lenders and really helpful to the American consumer, because there's a lot of home equity.
Yeah, we haven't seen second liens for a while. I mean, but it's not the first time Fannie and Freddie have ever had or offered second liens, is it?
Yeah, I mean, we haven't seen it in a while. I mean, there's been folks that are doing it, right? And it's and they've been really successful at it over the last couple of years, just because there has been a lot of home equity. So I think it'll be a good program. We'll see. I think it's a limited structure in the beginning. And so the details I think are still to be worked out. It's definitely a pilot program, but all in all, I think it'll be a good thing for a lot of folks who, there's this lock-in effect, right? I mean, there are, so many homeowners are, let's just say the word stuck almost in their homes because they've got a, 2, 3, 4% rate that they don't want to walk away from. But they also want to be able to perhaps add on or renovate or just tap the equity. So this will give them a chance to do that. So it's, hopefully going to be a good program.
Yeah, you could take the equity out, go buy something else, or put a down payment on that, and
yeah,
well, that's it's
so,
such a interesting problem of people not being able to give up their home because my rate is too great.
Right.
hear that very often, right? Normally it's yeah, the market's in the pooper, and we
Yeah.
can't move yet. But this one's like, yeah, hey, I got great interest rate.
Yeah.
But
Why would
what
you?
else are you hearing out there?
Right. And I think that is beginning to I think even that is beginning to wear on people a little bit. Obviously, you've got folks that have a 3% rate and they're never going to move, period, because they're that focused on their interest rate. But there's lots of people that obviously, the only reason that you buy or move is not interest rates. We all know that, right? Um, and so a lot of those folks are beginning, we're 2 years into this, and so they're beginning to have to begin to make those decisions. Like, I can't sit around and wait on 4% anymore, because it's probably not coming back anytime soon whatsoever. So, if it's going to take a 7% rate, I got to move. I need to change jobs, or I need a bigger house, or my family's grown, or I need to move back to mom and dad, or whatever. I mean, there's a zillion reasons, and I'm hearing that from a lot of my customers, and I'm sure that a lot of your listeners are hearing that too, and doing loans like that, because folks are just they're having to begin to sort of get off the seat and actually begin to go take some action. So there's aside from what the Fed does, or aside from specialty programs like this second lien program from Freddie, there's still beginning to be some natural movement, just because that's the way life works.
Mhm.
And that's a good thing. So you got, obviously we're in the buying season right now, so the folks are sort of experiencing that surge anyway. But I mean, just to see folks beginning to sort of get up and make those decisions, that's positive, because you have to adapt. I mean, I don't like buying milk that costs me $18 a gallon, but at the same time, I still got to buy milk for cereal. You know what I mean?
Yeah, yeah. Well, we had some comments by the Fed. What was it yesterday? And I'm curious to hear what are your customers out there thinking? I think kind of as we entered the year, it was more in 24 and stay alive till 25 was kind of the mantra.
Yeah.
But curious to see if that's kind of changed, or what's the mantra today?
Yeah, sure. Well, I think that a lot of folks are definitely, certainly anybody in this business, no matter which way you view it, is antsy for rate cuts. Doesn't matter who you are or how you view the world. A rate cut is a good thing if you're in the mortgage lending business, period. So, whether it comes, you know, this fall or next spring, timing wise, obviously makes some sort of a difference. But my point is that, it clearly that's a good thing no matter what.
Yeah.
Um,
Who's a rate cut not good for?
yeah, exactly.
That's the question at the end of the day.
Right.
Architects get busier, everybody gets busier.
Yeah, right. I guess rate forecasters, maybe. I don't know. I guess it becomes boring for them. Um, yeah, I mean, so if you're in the business, then rate cuts are a good thing, and obviously, it's good across the board, not just for home loans, but for all sorts of financing products and the costs of goods. Um, but it still remains true that good operators um, will see that as a benefit to their business. Um, but good operators can't, you really shouldn't, at least, use that as a strategy. That can't be a business strategy, right? The direction of interest rates is not a good idea for a business strategy if you're a good operator. And so that's, there are certainly a lot of mortgage lenders out there that employ that strategy, that employ sort of a, man, I'm just sort of waiting on the Fed to cut rates, and it can work out for you like that. But it's dangerous. That's a dangerous play. So um, anyway, my point is just that I think, as Chair Powell yesterday made comments on the economy as a whole, beginning to say that things are beginning to cool just a little bit. Obviously, he chooses his words very, very carefully. Um, and I think you can't really say that he's beginning to pivot, but he's beginning to to talk about things a little bit differently. You have to, because um, obviously these high interest rates are having an effect and will continue to have effect on the marketplace. Inflation's beginning to cool just a little bit. So all of that's really good. And, you add that to what we were talking about. You add that potential rate cuts and eventual rate cuts. Obviously, they will eventually cut rates, but you add that to the already sort of thawing marketplace in terms of folks just beginning to have to make decisions in their life. That will prove to be really good for the industry.
I think it's very true when we start seeing some of those rate cuts, things really start to break loose, and we know it's going to happen. It may take a little while to happen. What kind of impact would, say, a half a point make to your customers? Like what kind of activity do you think starts to happen? Or when do you, here, let me ask it this way. How much of a rate cut do you think it takes to start seeing like significant mortgage activity?
Well, that's a good question. I mean, because everybody's a little bit different in the way that they run their business. Some of our customers run a purchase oriented business. Some of them run a refi oriented entity entirely, right? And most of them are a mix. Most of them, especially today, obviously, most of them are a high purchase focused mix. But I mean, I think that, so in other words, my point is I think that they would answer that differently. But I mean, honestly, I think that any cut is going to spur activity. Now, obviously the everyday consumer is going to be taking, sort of the old adage advice in terms of, how much of a rate cut will help me. And I'm going to wait until I refi my loan until that, whatever that is, whatever kind of level that is, 100 basis points or 50 basis points for them, whatever they're looking at. But I mean, honestly, if you think about like loan officers, I mean, even a 25% cut, it's just going to get folks excited, period. I mean, so even though the interest rate itself, even though the math itself may not work out, it's still going to spur activity. Loan officers are going to get excited, and they're
Psychologically, they're going.
they're going to make phone calls. And look, the everyday, I mean, look, unless you're in finance and you watch rates, you're probably not, most people, unless you're in the marketplace today or you're in finance, most people have no idea what the mortgage rate is. Is that fair to say? I mean, I think probably most folks don't know the mortgage rate's 7%. They probably, the last time they looked was the last time they refied their house, and they think rates are still 4%. So, and that, that sounds, I think that sounds critical, but I mean, unless I'm in the marketplace, I don't keep up with the absolute latest updates to car manufacturing. So unless I'm in the marketplace to buy a car, I don't know what the latest updates have been to XYZ model. So so I think that some of that's education, but my point is just that even a rate cut of some kind gets, it hits the news headlines. It hits kind of the newsletters that people get on, it hits social media. And so all of a sudden, even consumers get excited because, it's cheaper to buy a house today than it was 6 months ago. And so that even just that mentality psychologically, I think spurs activity. So, I guess my point is that even a 25% rate cut, although mathematically it may not make sense for some borrowers, it's still going to spur activity.
Yeah, there's tons of demand out there.
Yeah.
Not a lot of supply, tons of demand. Just what are your customers thinking about? Construction and renovation as an option. How are those conversations?
Oh my gosh, yeah. So I mean, you and I have talked about this. I mean, so you think about if you think about just housing. I mean, so first of all, housing is really I mean, I'm on a housing podcast here, so I mean, I'm totally preaching to the choir. But I mean, housing is really fascinating when you think about it. Have you heard of? There's a fantastic article called "The Housing Theory of Everything."
Huh.
And it's I mean, it's kind of almost more like a white paper, but it's I love it. I think it's really cool. The concept is that the housing shortage, because we're talking about housing shortage, right? So housing shortage right now, as everybody knows, is probably about on average, it's somewhere between 4 to 6, probably on average about 5 million units. We're short 5 million units, which is
a lot,
a ton, right? It's a huge
a
number.
lot.
And we've talked about how
That's for the equilibrium, right? Like that's to get like, hey, we're in a good spot. We got to get up to 5 million.
yeah. So if we did nothing, if life stopped and all we did was build houses, we'd have to build 5 million homes just to get to the point where we have no shortage. Now, obviously, I don't think that results in 5 million people who are necessarily homeless, but the point is we are short on houses. And but the crazy thing is that, as a lot of your listeners will know, that household formation is double today what we are. So we're building about 1 million homes per year. That's kind of the long-term average. And today we're forming about twice as many households per year. So we're forming about 2 million households per year. And that's kind of a longer term average as well. So we're really entrenched in this shortage problem. Yeah, it's just exactly.
Compound, yeah.
And so anyway, the housing theory of everything is that, hey, not only are we short homes, but that has a monster impact on society, like a really, really bad impact on it creates a broad range of problems: substance abuse, unemployment, domestic violence, disease, like how there's like actual legitimate human tragedy, human problems occurring because of the shortage. You know, we think about it in terms of opportunity, construction opportunity, mortgage opportunity, clearly because that's our business. But the housing theory of everything refers to the idea that, hey, there's a real issue. So from a construction standpoint, you know, you think about how important construction is, not just because we're behind, but because of the impact. It's a big deal. And so I think that it's a niche industry. And so not everybody's focused on it, but I think folks are beginning to wake up more and more to it, to realize that it's a problem that needs to be solved, and it presents a huge opportunity. I mean, it's a fantastic niche product to offer if you're a mortgage lender, because there are a shortage of homes, and so folks are trying to figure out where they want to move their family or what they want to do from a housing perspective, and build is a good idea. You know, it's not necessarily an easy program to offer out of the gate, but it is a fantastic program that if you get somebody in-house who knows what they're doing. There's a lot of great construction experts out there. And, you know, a plug, that's why you need somebody like a Land Gorilla to help you along in the process. You know, I mean, obviously I'm on a Land Gorilla podcast, but you guys have done a really, really good job over the last 5-10 plus years of really helping lenders build their programs, holding their hands, helping them draw policies, helping them figure out how to do XYZ, giving them the software to do what they need. Because a lot of times people need that. And so that's, I think that's a big deal. But yeah, I think folks are really waking up to the importance of a construction program.
Are you seeing the demand, like any change in interest and what I'm saying in interest, not an interest rate, but you know, we talked about kind of what were some of the trends coming out of the national secondary and their lender profitability. Are you seeing any trends with you know, just general inquiries, you know, hey, sublimits for construction line, you know, can we put 203K loans on our warehouse line? Are you seeing any kind of different trends? Like more people are asking, they're not asking, like what are you hearing?
Yeah, for sure I am. I mean, I've got a call later this afternoon with a client who's planning on opening up a construction program. You know, I made a trip down to Texas just a couple of weeks ago to talk with a couple of different folks about a construction program. It's beginning to get a lot more play, and it's a product that folks are beginning to see that there's a, you know, benefit to offering. You just said something, but I can't remember what you said that I was going to respond to. But you know, it's one of those things that, you know, there's big and small, really. You know, but some folks offer construction programs because, you know, they just want to have sort of that tool, you know, in their box to offer a borrower, you know, should they ask about it. So some folks only do, you know, a few loans a month or a few loans a year even. But you know, as they ramp up that program, I think they begin to see that, hey, this is a real there's a real opportunity here.
Yeah, the other profit sources that not just from the origination and sale, but you're getting, fee income, you're getting the net interest margin during construction, and you build a good enough size portfolio, and it's just a gift that keeps on giving.
Yeah.
What it's kind of interesting. I get emails all the time like, hey, where can I go get a sublimate? We want to get into construction and see what's out there. What makes when you're considering somebody for a construction sublimate, what are some of the things that you consider, or First Horizons considers, when issuing a sublimate for construction?
Yeah, sure. Good question. Yeah, so I mean, we talk some about how certainly there's risk in the program. There's risk in everything, obviously, right? It's risky to walk outside. My uncle, who's a cardiologist, likes to say that it's dangerous to be alive. Um, so obviously, so the name of the game, right, is to measure that risk, right, and to monitor it. And so when we think about a construction program, obviously what we care about is we care about the people uh, who are actually running the program. So I mean, we want to know, hey, tell me about your profile, tell me about your history, tell me about your what you've done and how you do it, because that's going to have a direct impact on sort of how the whole program gets run. We're very intentional about measuring our risk, getting comfortable with the risk reward ratio. We care a lot about obviously measuring that, making sure that really that you're actually monitoring it more closely than even we do. We want to loan our money to people as if it were our own money, and make sure that they're making the right decisions. But I mean, as far as the actual program itself, I mean, everybody does things a little bit differently. So we try not to draw more lines than we have to. We're a bank, so obviously we've got red tape, but we do our best to listen to what you do. By and large, most mortgage lenders are entrepreneurs, and they choose the flavor of ice cream that they sell every day. And so we try to listen to what you do, um, and then help you do it. So most folks, that have construction programs, obviously they're offering loans that are written to agency guidelines, and that are custom builds. I mean, that's what you run across the most. We do a lot of manufactured housing loans. We do a lot of 203K loans. 203K had a nice update yesterday. I'm sure you saw they increased the program up to, I think, $75,000 cap. So that's going to be a big deal.
Yep.
So what we attempt to do is listen to what kind of program you run, and then we try to figure out a way to help you do it.
Well, what's the, what I heard there is, hey, we really look at the organization and their experience, right? Like first and foremost, who's in charge? What's your experience here? Are you guys already doing it? Are you trying this for the first time? Who's going to be running the program? Those are the, kind of analyzing almost like the character and experience of the
Yeah.
company. How much business they probably already have with you is
Yeah.
another one in there. And then, wanting to see the controls that they have in place and that they're monitoring. I heard you say monitoring it a lot more closely than what you are.
Yeah. Yeah. I mean, look, obviously there are a zillion ways to skin a cat. I mean, everybody brushes their teeth differently, right? But you can run a construction program the same way, right? I mean, some folks, as you learn, and we have seen from time to time, that you start asking about a construction loan, and you realize, do you know the history of this loan? Do you know the actual status? Are you really following this loan? And sometimes you run into folks that aren't following it as closely as you'd like, and you have to encourage them to do that. And then other folks are really, really on it. They know everything about the Jones loan. So clearly, what we would prefer and what we're looking for as a creditor as you would be too, as anybody would be too, is that you're looking for folks that are, they're already, they already care more about that inherent risk than we do, you know. Um, Programs and products and all those kinds of things as a creditor, that all matters. But at the end of the day, it's humans who are running a program. And so you've got to be able to place a lot of trust in that human. And, when people tell you who they are, you can trust them. And so you just, you do your best to kind of monitor all of that.
No, I love it. Now I'm gonna kind of twist everything, around here, and for a independent mortgage banker out there, what should they be looking for in a warehouse bank? Say they're out looking for a construction supplement. What makes a good warehouse bank as a partner, especially when it comes to construction and renovation loans that are getting warehoused?
Yeah, sure. Sure. That's a great question. That's a great question. So, um, the we think, and I think of the business of warehouse lending as a relationship business, right? So everything I just said in terms of the people, um, you know, money is a commodity, so no surprise there. So you can go get your money anywhere, but this business, the mortgage lending business, isn't it's not all about just getting the money that you need, because you're gonna run into problems. You're gonna run into days where you're stressed, where you need something fast, where you need something that's different. You need something that's out of the box. You need something that you have a loan that's a problem. And every loan's got a story, right? So the idea of running a warehouse business, to some degree, the barrier to entry is low, because all you really need is money. All you're doing is, like I said, you're just handing out big credit cards. So the ability to run a warehouse business, it's simple. But running a long-standing, successful, reliable warehouse business is totally different, and it's just like anything else. I mean, it's like any other business. That's true of any business. You can open up a candy bar shop on the corner and sell candy bars tomorrow. But if you really want to develop that and become a program that's a long-standing business where people come back year after year, that's a very different thing. So we think about it as a partnership. We think about it as a relationship, where we know you and you know us. So we care a lot about making sure, like I said previously, that we're able to help you do what you do. I mean, if we're doing our job well, then what we're doing is we're listening to what you need, we're providing it for you, and then we're getting out of your way and letting you run your business day to day. And that includes construction too. I mean, obviously, from a construction standpoint, clearly we're, in order to advance funds, we're making sure that the work's been done. We're checking boxes. But for the most part, we want to get out of your way, let you build homes, and do the next one. So, I mean, I think, the answer in terms of like what should lenders be looking for, I think that they, if I were a mortgage lender, I'd be looking for a warehouse partner who can give me the kind of capacity that I think I might need, who can fund my loans fast, who can work with me in terms of the intricacies of my program, and who can help me even. I mean, who can help me kind of work through problems. Especially construction loans. We offer out the gate, we offer a 365-day dwell period, which is somewhat standard. But some of those loans, some of those homes are going to get built in 7 months, and some are going to get built in 17 months.
Yep.
And so, you've got to have somebody who's willing to work with you in terms of understanding that that's the way the world works. Yeah.
No, that's really insightful too on the 365, and what do you do when you got a loan that goes over, and what do you do when it gets cut short, and having some flexibility there is great. Well, I really appreciate all this and some great insights from the national secondary and some of the trends that are out there. As we get towards the end of the podcast, we do a little rapid fire session. And if you're familiar with the rapid fire session, one of my favorite parts of the podcast, but I'm just going to shoot off some questions at you, Ford, when you're ready.
I've listened to your podcast. I've heard you do this.
Okay. All right. Recent, and I know this because I asked you this one right before we started. Recent movie, or we'll say book, that you've come across that you would recommend to others.
Okay, yeah, we just laughed about this. All right, so literally just laughed. So I've got 4 girls and ages 12 to 3, and so we're, my wife and I are sort of constantly asking ourselves, like, what should we be putting them in front of? What sort of movies should we be gearing them towards? So anyway, lately we've been talking about how, of course, should just be the shows that we watched as kids, so the 80s, 90s kind of stuff. And so literally last night we just watched the movie Beethoven, which folks may remember. Fantastic movie.
Epic. So good.
Yeah.
Absolutely love that one. All right, question number 2, and there's going to be 3 total. So question number 2 is, okay, would you ever build your own home?
Yes, I would. I have never done that. But I have a long list of things that I would want to include in my home, things that my kids have told me they would want to include in my home, ridiculous things. One of my daughters has said she wants her own pool. That's probably never happening. I don't think I'm ever going to give my daughter her own pool.
So that's great. That's great. Yeah, but I think my kids would want the dog wash. They would want to have a dog wash. Yeah. And we don't have a dog. But they're also twin 5-year-old boys and a 14-year-old boy. But
sounds like you need a Beethoven.
Oh, they want me to get a dog. I hear it every day, nonstop. Yep. All right, last and final question. If you could snap your fingers like that and had the authority, the power, the magic to put on it, what law or regulation or regulatory body would you change?
Oh my goodness.
A great question, isn't it?
Yeah, that's a really interesting question. If I could snap my fingers and change any law, I think that you're probably asking me about mortgage lending, but I'm going to answer the stop sign in the middle of neighborhoods.
Oh.
I think stop signs in the middle of neighborhoods after 9 o'clock at night or something like that should be yield.
Optional.
Yeah. I don't know. Maybe that's a really bad idea. But
it's great.
Yeah,
has nothing to do with housing, but it's still great, man. I love the ones that get me is like you go to Costco or Home Depot and the stop signs that they have, in their shopping. It's like, really, do we need to have a stop sign right here? It's not a street. Like, we're in a parking lot. It's seems you just yield to the car that's coming in the other direction, and if you hit them, that's your fault.
Seems smart to me. Yeah, seems smart to me. They've got in Europe, obviously they've got all these huge roundabout structures that are pretty elaborate. But I mean, I don't know. Maybe some folks really do need that regulation. Maybe that's a good regulation to have.
Stop signs. I had a friend that used to say, "Oh, those are for other people." Straight on through. I'm like, okay, hey, it's got to use that one with the kids sometimes when I roll through one. Really good. Oh, that was for other people.
That's for other people. Yeah.
Thank you so much for being on the podcast, Ford. Really appreciate it. Now, if anybody that's listening to this podcast wants to get a hold of you and reach out and ask you some questions about, warehouse lines or construction sublimits, what's a great way for them to get in touch with you?
Yeah, sure. You're welcome to shoot me an email. It's pretty simple. fwilliams@firsthorizon.com. Happy to talk to anybody about any of this. Obviously, we love this business and we've been doing it for a long time. And so love to help anybody who already has a program or who is, thinking about launching a new program. I'm glad to talk.
All right. Fantastic. Well, thanks for being on the podcast again. Looking forward to have you on in the future, but thank you very much. Have a great day and really appreciate you being on the show.
Hey, thanks guys. I appreciate it.
This podcast is intended for educational and informational purposes only and does not replace independent professional judgment. Land Gorilla Inc. makes no representations, warranties, or promises for and disclaims any express or implied warranties related to content. Before acting on any information, you should consider the appropriateness of the information as it pertains to your unique business needs.